I think it's the Treasury Secretary in conjunction with the president and maybe even in consultation with the Fed, if I had to guess. He said we're not going to revalue gold, which would in essence be monetizing it because it's still valued at 42.22.
But what if you just marked it to market? That's not revaluing it.
That's correct. And I think that's ultimately what they will do. Gold goes higher, like Van Eck's fund says, 139,000. If you sell a $20 million bond right now for 20 years, it's about 4,500 ounces of gold at current prices. But at 139,000, it's like 120 ounces of gold in 20 years. Much higher gold accumulation by the West, and a devalued dollar. And how they tie all that together, I guess, remains to be seen. Let's just hope. I might just pull an all-nighter and maybe even have more to drink than I would otherwise, just to calm my nerves on July 3rd as we get to this July 4th deal where he is going to make a speech instead of all of these disrespectful artists who pulled out to embarrass him and the presidency, which I can't stand this divisiveness anymore. It's enough to make me puke.
The debate over gold, debt, and the future of the U.S. dollar is becoming increasingly important as governments seek ways to manage rising fiscal pressures. Many investors are now watching for signs that major monetary changes could emerge over the next few years. Andy Schectman, a leading voice in the precious metals industry, argues that recent developments in financial markets should be viewed through the lens of a much larger long-term transition. He points to growing interest in physical gold, expanding sovereign accumulation, and the possibility that policymakers may eventually allow gold to reflect its true market value rather than keep it tied to outdated accounting measures. A key theme is the idea that authorities may not formally revalue gold, but could instead mark official holdings to market prices, creating a significantly different financial landscape. Such a move could strengthen balance sheets while helping address debt-related challenges. The broader expectation is that a weaker dollar, rising gold demand, and renewed domestic investment could work together within a new monetary framework. If these trends continue, gold may remain one of the primary beneficiaries as confidence gradually shifts away from traditional debt-based solutions. Now, we present the clips from Andy Schectman's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
I think it's the Treasury Secretary in conjunction with the president and maybe even in consultation with the Fed, if I had to guess. But he said we're not going to revalue gold, which would in essence be monetizing it because it's still valued at 42.22.
But what if you just marked it to market? That's not revaluing it.
That's correct. And I think that's ultimately what they will do. And I don't know if that's going to happen right now or not. Maybe it shines too much light on things. But the minute they roll out
would have to happen together.
Yes, the minute they roll out the Treasury, they will mark it to market and then allow, through the devaluing of the dollar, all of the interest going into gold, pushes gold higher, devalues the dollar, allows manufacturing to be sold to the world like everyone has done to us, and allows the debt to be paid off easier. And then at the same time, if they back the back end of the Treasury, allows for zero upfront borrowing costs to reinvigorate our infrastructure of manufacturing, to build it with no upfront costs. As gold goes higher, like Van Eck's fund says, 139,000. If you sell a $20 million bond right now for 20 years, it's about 4,500 ounces of gold at current prices. But at 139,000, it's like 120 ounces of gold in 20 years. So everything works out, including the amount of gold you have to pay back at the end. Remember that article, that advertisement you pulled out where Donald Trump Jr. talked about, yeah.
I think we have it if we want to pull that out.
Like, we're going to revalue gold. Well, this is a way to revalue gold without the U.S. government doing it. And other entities like Tether and commercial banks who are issuing the stable coins, who will be able then to keep the interest and buy gold, would run proxy cover for the government. It's a way for the government to get its gold, to enrich the banks, the fintech companies like Tether, and stay one step arm's length removed so that it isn't so visible in your face what is happening. Now, will he announce a link to a 50-year Treasury? Because, Judy's comment was it was going to happen on July 4th because it was such a monumentous day. In her mind, he framed it as being the biggest day of his presidency, presiding over a country's 250th anniversary, and all of the changes that we may see. And if you start by seeing Warch start to get rid of the dot plot and all of the things that have been standard protocol forever, well, maybe it is time to do it. We shall see. Part of me is, yeah, it ain't going to happen. Part of me is like, yeah, but it very well may. That's why I'm 50-50. I don't know. But I don't think it's dead in the water if he doesn't announce it on July 4th. I'll be disappointed, yes, as will a lot of people. But I do still think that the rails that are being set up again favor much higher gold accumulation by the West, and a devalued dollar. How they tie all that together, I guess, remains to be seen. Let's just hope. I might just pull an all-nighter and maybe even have more to drink than I would otherwise, just to calm my nerves on July 3rd as we get to this July 4th deal where he is going to make a speech instead of all of these disrespectful artists who pulled out to embarrass him and the presidency, which I can't stand this divisiveness anymore. It's enough to make me puke. So he's going to, instead of listening to rock bands or whatever, country western bands, whichever one's pulled out.
Some are still performing.
Are they? I don't know. Are they? I thought most of them pulled out.
Many have pulled out, but there will be some.
They should all, their careers should all end as far as I'm concerned. Just the disrespect to the country.
To the office of the presidency.
It's just disrespectful as being an American citizen, period. But that will give him more time to tell us about the gold backing of the Treasury.
And when he says that you don't expect an immediate spike in the price of gold?
Well, you would think so, yes. But I don't know. Depends how he says it. I mean, yes, it should.
Well, they'd have to frame it delicately.
Well, maybe the best way to then do that is to make sure that gold comes from a lower place, like knocking it down since January. Oh, that's right, that happened. I forgot. They knocked the hell out of it since January. And yet, as they've been knocking it down, we've been seeing deliveries off the charts around the globe. So the central bankers don't give a crap. In fact, they were happy that the price got knocked down. And maybe that is the way to frame something like this, is let it start from a much lower high than announcing it at $5,500. He could say something like,
but he could.
We intend to audit Fort Knox and maybe even do something special with the Treasury.
Mm-hmm.
I mean, as simple as that, and I'm partying. I mean, it's I'm coming in to work. I'm coming in on July 4th in the midst of fireworks to do a podcast and say, ha, but we'll see. I don't know. It just look, man, you can default, you can inflate, or you can try and come up with a situation that allows you to produce. And the only way to produce and to sell that to the world is to abandon the reserve status if the central banks immediately start dumping all their gold. But to me, nothing else matters to me in terms of gold's accumulation in the retail market or the nonsense that we hear from the mainstream. The most well-funded investors and well-informed investors on the planet,
smartest money,
have been showing you where they think this is all going in an inelastic fashion. They don't care about the CPI numbers. They don't care about the price of gold today. They don't care about the expectations. They don't care about the war. They're continuing to accumulate gold because they understand too much global debt has been issued and the inability to service it is right around the corner, especially as rates go higher. And, I think it's interesting. Again, I'll paraphrase it, but I mentioned that only Poland has purchased more gold than Tether over the last 2 years. And it was Adam Glapinski, the head of the Central Bank of Poland, who said, we accumulate gold because when someone pulls the power to the global financial system, which is based solely on electronic accounting records, well, that sucks. Well, that's why we accumulate gold. Anyways, I just thought that that's very provocative to hear from a central banker who has been buying gold at levels no one has ever seen before, and now says we buy it because someone might shut off the power to the global financial system. We're based upon electronic accounting records.
The discussion also explores how future financial structures could encourage greater ownership of hard assets. Rather than relying solely on conventional monetary policy, policymakers may seek alternative mechanisms that improve liquidity while supporting long-term economic objectives. One possibility is that higher gold prices could, over time, indirectly ease debt burdens. As confidence in tangible assets grows, capital may continue to flow into precious metals, especially if investors become concerned about the purchasing power of currencies. The framework being discussed suggests that gold could play a larger role in restoring balance to an increasingly leveraged financial system. At the same time, institutions connected to emerging payment systems and digital financial infrastructure may become more influential. Whether these changes arrive quickly or gradually remains uncertain. But the overall direction points towards stronger demand for real assets. The expectation is that gold accumulation and currency adjustment trends are likely to remain important themes in the years ahead. Now, let's get back to the interview.
the SIPS cross-interbank payment system has already been released. China signed up the countries in Southeast Asia, the Asian countries, which are their largest trading partner by far. 800 million people, twice that of the United States, are now using SIPS. You're seeing all of these countries sign deals to trade unilaterally with one another so that you have local currencies trading with one another, and instead of one currency, everyone trades their own, and the settlement vehicle is gold instead of US Treasuries. That's what it's going to be in the global South. And I think I think that this administration is happy with that. In other words, you soft default on the reserve status of the dollar. You maintain the dollar's use for trade and for a unit of account. But if you save in dollars, you're going to go broke. And I think that's where gold comes into play, because people would say, well, what the hell do I want to hold treasuries for if they're inflating away and they're changing the metric by which we gauge inflation? Screw it. No, fine. Here's gold. We'll peg it to it. It's deliverable. Boom. You just all of a sudden fixed all angles. And I don't know, to me, it's very simplistic. It's very elegant. It's very easy. It would work, I think. It starts to go higher and higher and higher and higher. And I think the way that they do it is organically. It's synthetic in nature, but organic in its movement, because it will be moved not by government edict, but by this synthetic appreciation of or accumulation of treasuries, and the interest having nowhere to go but plugging it into there, which is self-serving for the government, for manufacturing, for Tether. Everybody wins in this except, I guess, those who are shorting gold. By all the central banks who've been buying the crap out of it. Maybe the central banks, maybe they all know where this is ultimately going. I don't know. But this is where look, you have Enbridge, which is a rail. You have SIPS, the cross-interbank payment system, Chinese, which is also a rail. But the real question is what settles on top of that rail. And this is where the BRICS unit idea becomes so important. It's a trade settlement currency designed around 60% BRICS plus currencies, 40% gold.
Why not just the yuan? Why not go it alone?
Because that's not what the BRICS system is. What they are framing it as to not bring into the mix Trump's anger over the BRICS countries unifying a new settlement system, is the internationalization of the yuan. And they're tying it to the expansion of the Shanghai Metals Exchange. Saudi Arabia is one on Enbridge. Well, the one in Saudi Arabia is now operational. Their vault is operational. The next one is being built in the United Arab Emirates. Oh, that's right. They're a member of Enbridge too. And then the first one is in Hong Kong. Oh, that's right. They're a member of Enbridge too, aren't they? That's right. And so China, the Shanghai Metal, they're a member of Enbridge too. So you have China, Shanghai, Hong Kong, Saudi Arabia, United Arab Emirates. Geez, that's interesting. Now, I haven't seen one in Thailand yet. Maybe that's next on the horizon, but expansion of the exchange where you settle imbalances in gold, and it is the expansion of the digital yuan, or the international, the renminbi. Anyway, you look at it, that's how it's being framed, but it is the rails of the BRICS unit. I think you will see this happen, where countries will trade with one another using their own currencies, settling imbalances in gold. And at first it will the actual white paper on it says the BRICS plus countries. Well, there's a whole bunch of there's 10 or 11 countries that are already part of BRICS, plus 30 or 40 more that have expressed interest. Now, again, I talk about this all the time. When you were at your last employer, the last interview I did with you before we so wonderfully began working together,
Happiest moment of my life.
and mine, and you said, but Andy, the BIS and their innovation hub is a Western institution. And it dawned on me, a ding, ding, ding at that moment. And when Augustus Carstens...
I love it when I give you the ding, ding.
You did. Well, it did. And when Augustus Carstens pulled the rug out underneath the BRICS at the 12th hour, saying we can't do business or provide any type of system that will allow countries to sidestep Western sanctions, it's as if, like I've always said, that they just realized Russia was the R in BRICS. That infuriated Xi and Putin and the rest of the BRICS countries. And that's why you don't hear anything about it anymore. And they are setting up the rails, and they are using it under the cover of Xi and the yuan being internationalized, I think, to set the stage for the implementation. The article that just came out in the Financial Times specifically cites the BRICS, not China, but it is Chinese technology, along with that of Hong Kong, Thailand, UAE, and Saudi Arabia, all of which, with the exception of Thailand, and maybe they do have a gold vaulting system on the horizon or one there already, which I don't know. I should check. I should know that. But all of the others have vaulting systems there and operational or on the horizon, like the UAE for the BRICS, but they already have one in Dubai. So, I mean, this system, the vaulting systems, will connect with those in Singapore, with those in St. Petersburg, with those in India and Mumbai. They'll all connect, and it will be settlement system where you settle imbalances in gold, but you trade with one another in local currencies. Now, the question is, will they allow at some point the dollar to be part of this? That's an interesting thought process. I don't know if they will, but certainly it will be a parallel system once fully mature. The system in London and in the United States that the COMEX and the LBMA has kind of outlasted its usefulness in terms of the way that they have rehypothecated and distorted, in essence, letting the tail wag the dog, where the commodity should be the one setting the price, not the futures market. Well, we all know that it is the futures market that sets the price. That perversion is what is, I believe, part of the reason you are seeing expansions all around the world in vaulting systems. And they all say very clearly, we're not here to challenge the Western system. Yeah, my ass, you're not. You are challenging, and you will, when fully implemented, be very formidable when connected, not only with all of the other vaults, but with all of the other rails that allow transactions and settlement to happen with a very formidable swath of human population, all talking to one another. And I think very quickly you find that the London system and that in the United States become useful only to a very select few and obsolete in the end. It's the beginning of the end, I would argue, for the Western price setting of commodities, because these countries understand, and the only reason they're not bitching is they're the ones all accumulating it. They understand that to allow the West to continue to do that is ridiculous. And maybe JP and Deutsche Bank see the handwriting on the wall and said, kind of like India and Saudi Arabia and the UAE having both feet, one in the West and one in with the BRICS, because you have to be judicious and diplomatic in how you choose sides. There will come a moment where the bell rings and you have to choose sides, but until then, there's no reason for anyone to explicitly, give Trump the middle finger. It's kind of like placate Trump and continue to build your back door, to continue to build your escape hatch. JP Morgan knows about. What do you think Trump knows? I bet you Trump knows too. And maybe all of that has to do with who the hell stood for delivery for $13 billion in gold this month. Now, it didn't leave. We've seen about 1 million ounces of gold leave COMEX in the last 30 days. But who stood for possession for all of that gold quietly? Shh, don't tell. There's a difference between paper settling and physical. I want the numbered bars in my account. The fact that someone wants the numbered bars over a cash settlement is huge. But this is the same thing we continue to see. And yet no one speaks about it. Like, where's the mainstream saying, by the way, Johnny, what happened? Who bought all that gold? And why didn't they just cash settle like they always did? So maybe President Trump understands all of the things that he might be trying to do, you can't say out loud, or you get immediately crowded out of your trade. And so I think that a lot of the things, that's why there's supposition involved, and Occam's razor, and I'm just stupid enough to say what I believe. Now, I don't know if I'm right on any of this stuff. Judy Shelton was on my show and your show and said these things. I read her book. It's very convincing. Do I know that it's going to happen? And is it over if it doesn't happen July 4th? No, but it certainly seems like gold and rising gold, which devalues the dollar, will have a central role in where this is all going.
Another major focus is the possibility of significant policy announcements tied to broader economic reforms. While there is uncertainty regarding timing, the belief is that the groundwork for substantial monetary changes is already being established. Financial markets often move long before official confirmation arrives, which is why many observers continue monitoring developments surrounding debt issuance, treasury policy, and precious metals. The long-term outlook presented remains highly constructive for gold. Continued central bank accumulation, persistent fiscal deficits, and concerns over currency stability create a backdrop that could support considerably higher prices in the future. While ambitious projections should always be viewed cautiously, the argument is that gold's role in the global financial system may expand as governments seek solutions to rising debt obligations. At the same time, silver could benefit from many of the same forces if investment demand strengthens alongside industrial consumption. The combination of monetary uncertainty, geopolitical shifts, and changing reserve strategies suggests that precious metals may remain central to the next phase of the global financial cycle. Whether changes arrive suddenly or unfold gradually, the trend points toward a greater appreciation of scarce, tangible assets, and a reduced reliance on purely debt-driven growth. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.